All right, guys. Let's see. It's welcome to Wall Street Wednesday, January 27th, 2021. I'm going to wait for a number of people to join. I've had a lot of people asking questions. I'm going to wait for everybody to join. Welcome, welcome, welcome. We're going to discuss what everyone's talking about in the marketplace today. We're going to discuss GameStop, and we're also going to discuss AMC and some other things. So I'm just giving people a few minutes to get on. Yes, so much to talk about. I always have stories. I've been at this. Let me see. When did I got licensed in the business? Show my age again. As a broker, I got licensed just before the crash, October '87. Now I had been working as a financial planner years before that, but I basically got started as a broker October 1987, literally 2 weeks before the crash. So I've seen a lot of things in my trading. I've seen this before. So I'm going to break it down to you guys and explain to you what's going on, what's happening. I'm also going to talk about the fact that you're probably going to see some type of response by the SEC, so forth, because what's going on actually right now is a form of stock manipulation. But I'm going to go into more detail. Again, some really interesting stuff going on here. And for those who've been around trading before, you might have seen this before, seen it. So I'm going to talk about it. I'm going to give you some examples, and we'll get to it. I'm just giving people a minute to get on. I know I'm going to end up repeating myself because some people, because of work, other things, get on late. And yes, Christian, I agree. It is a beautiful day to be alive. I got ready to say a curse word. I love this stuff. So you know what I was going to say. This is what gets my heart pumping and analyzing this. And that's the beauty of the market, at least for me, is that every day is a new day. Every day something else is going on. And there's always an opportunity out there to put some money in your pocket. Now, with all that said, I'm gonna dive into GameStop right now. So it looks like, just give you some numbers, which, as you guys know, doesn't really matter much. But it looks like GameStop closed at $345.90. But all this aftermarket trading will make the stock move. All right, let me break this down for you. I'm going to talk about what happened with GameStop, and then I'm going to give you some relative stories, some relative examples of how this has happened in the past. Any of you guys that are on this call, and there's a few of you that are my age, I see, anybody that's on this call has actively been trading when the dot-com bubble came in 1999, 2000, 2001. If you were actively trading during the dot-com bubble, there's a lot of similarities here. So let me explain what's going on. All right. Citron Research was one of them. Citron Research, well, let me go further back. I think a couple of my former students might even be on this call. One of the things I used to do in my class with my former students is, I'm doing two things. What I used to do with my former students was I used to have them find a stock and recommend a short position in the stock based off of fundamentals. And one of the stocks that we went short, my student, Brandon, I believe it was Brandon Young that did it, wrote a short report on GameStop, and I agreed with him 100%. I think it was Brandon. I hope I'm right. So the deal with GameStop is, forget about what's going on right now. The deal with GameStop is this. A lot of you guys, when you were younger, you used to go to GameStop. You could go back and forth to GameStop. You'd play a video game. You get tired of it. You'd go back to GameStop, swap it, get some cash for that, and buy a new game. And that's how GameStop made their money. It was a place that you could swap old games, and they were making their money that way. And about 5, 6, 7 years ago, your major gamers started streaming the games. As some of you guys know, you bought a subscription, they stream the games to you, they stream all the updates. So with that streaming, DVDs, in terms of games, became obsolete, which in a roundabout way made GameStop obsolete. That's why you guys don't go into GameStop anymore, because those games are actually sent right to you. So we started recommending shorting the stock years ago, and the stock has done nothing but live up to everything we said, going straight down, straight down, straight down. Now, now moving into recent events. One of your most noted research companies that's known for shorting. Now, shorting is you're betting on the price of the stock going down. Citron Research, a lot of people are familiar with the name, is famous for being short. They got short GameStop. I wrote a report on it. They got short. They told all the reasons why. Over the last 5 years, GameStop has tried to do everything they can to start making money and be relevant again. They started, as some of you guys know who've been there, you could buy cellular phones there. I think they sell crickets. You can sell your cellular phone and get money for it. They're trying to find out ways to get relevant. Somewhere along the line, now understand this. The only way you can short a stock is you have to borrow the stock and then short it. One of the things that we're looking at, and I'm looking for it right now, is that I'm looking, the short interest is 140% on GameStop. So let me explain what that means. 140% short means it would take 140% of the average daily volume. So if all we did was just buy the stock to cover the shorts, it would take a day and 40% of the next day. But as you guys know, there's more than people covering their shorts. So those who don't understand, when you short a stock, and here's what's going on with GameStop. When you short a stock, at some point you have to buy it back in to either lock in your profit or lock in your loss. So with GameStop going up, what happens is all the people that were short GameStop, as it starts to go up, they're losing money. They get what we call a margin call from their brokerage house. And basically the margin call says one of two things. Mr. Milligan, either put more money in to keep your short position or close out part of your position or all your position to make us whole. And the reason the brokerage firms do this is because they are not going to be at risk. The more volatile the stock is, the more risk there is for them. They don't want to have risk, so they're going to make you put money, which means you're going to have some skin in the game. So as GameStop started to go up, you had I don't want to call them out. You had somebody on Reddit. You had the whole people on Reddit recommending to buy the stock. As the stock started to go up, the shorts that were short the stock that were losing money started to buy it, which pushes it up. Then with the people from Reddit, which we call natural buying, that was saying buy the stock, it's going higher, buy it, whatever they were saying, they buy it and they push it up. As it went higher, the shorts are forced to cover or buy, close out position, which means they had to buy, which pushes it higher and pushes it higher. That's what's going on with GameStop. All right. Now, that's a short squeeze. This storm this was a perfect storm. And the reason being is because, one, there was a huge short position already in GameStop. Huge short position, 140%. And the stock normally trades on average, I'm looking at it now, average daily volume is 101 million. So virtually it would take about 140 million shares of just buying to cover the shorts, to cover all the shorts. Not going to happen. So now here's what I'm going to say to you guys. So GameStop, here's the deal, what's going on. These people that on Reddit that are putting out this buy recommendation, it really is another form of what we call front running. Now, they're not doing it intentionally. I don't think they understand the rules. But the way the SEC monitors us is that, and I'll use a brokerage firm, for instance. A brokerage firm has several thousand clients following it. The brokerage firm cannot take a position in a stock and then proceed to tell everyone how great it is, you should buy the stock and start to push it up. All right? That's called a pump and dump. That's what you're seeing. Now, the other thing that's happened also with GameStop is now formed into what we know as a bubble. And that's why I brought up the .com bubble from 2000, 2001. And a bubble, the whole premise behind a bubble is I can buy it, offer it back at a higher price, and someone else is going to come and buy it. There's no fundamentals. The bubble's all about somebody buying it, offering at a higher price, and someone coming behind them and buying it. All right? And that's how a bubble forms, because as the price goes up, people just keep buying. Again, .com bubble in 2000, 2001. The real estate bubble up until 2007, 2008. Now, the one thing that all bubbles have in common is that they will eventually pop. And when they do pop, the security, the market is going to drop like a rock. All right? That's the reason why you're seeing so many short sellers still in GameStop. Eventually, this bubble will burst. And when it does, the challenge you're going to have is the last person still holding that stock is going to get their rear end handed to them. All right? The stock is going to enter what we call a fast market. Now, it's already been in a fast market. Fast market means that you can't trust the prices you see in front of you on the screen. And the reason why you can't trust the prices is because the market's moving so fast, they can't update and keep the prices updated. So all this to say that when this bubble bursts, great question, Brian. When this bubble bursts, the stock is going to drop like a rock. Think about what happened with the dot-com bubble when it burst. Was that eToys went from $100 a share down to zero overnight almost. The list is endless. When the dot-com bubble burst in 2008, what happened to the real estate market? What happened to our financial markets because of the real estate? Boom, it dropped like a rock. We've had bubbles in the past before, and now we're forming a bubble in GameStop. Let me put some fundamentals in here. GameStop, I did some quick looking, some quick calculations and so forth and so on. Fundamentally, GameStop is probably at best worth $20 a share, at best. Now, the one thing about bubbles when they burst is that they don't go back to their fundamental value. They're going to go down below that. When that bubble bursts and people start to try and get out, one, you don't want to be the last man standing, last person standing, last man. Two, it's going to drop so fast. The analogy I'm going to give you is almost like trying to catch a knife as it falls off the table. You know that if you misjudge catching that knife as it falls off the table, it's going to slice you really bad. So the thing I'm going to tell you is, if you're trading GameStop, one, do not hold anything overnight. All right. I know that overnight it goes up, it comes down, it's getting its aftermarket moves, but I'm here to tell you, you do not want to own this stock overnight, because what happens overnight, you get your gap opens or your gap downs, gaps on your opening, either gap up or gap down, which means you could actually lose some significant money. If you're trading this, and one of the guys on the call today, right now, text me, said, Mike, I just brought some GameStop this morning and the stock's already at, whatever, I think it was 180 when we were texting back and forth. And my comment to him was, I said, look, I'm not trying to tell you what to do, but if I were in your shoes, I'd sell it. Take your profits and run. This thing is going to be volatile. Let's see, Christian, in my 2 cents, I benefit from the upside, taking some profits, just brought a basket of puts on GM, EXP, and AMC. Now, other people have brought this up. You can buy puts. There are puts. In fact, let me pull this up real quick. Stock options, GameStop. Bear with me a second. Stock options, GameStop. All right, you got some puts. Let's see, you got some expiring in 2 days, so I'm not going to look at those. But again, you got a real hefty price on these. Whoa. I'm looking now, and the stock closed at what did I say? The stock right now, it looks like stock's 332 by 333, so 340, 330 is a number. The 330 puts that expire in 2 days, if you were to buy them, cost you, let's see, $9,400. The puts, let's see, the puts expiring. Wow, that can't be right. I guess it is. The puts expiring in 9 days, February 5th. The 330 puts are $16,725. Whoa. And as you can see, the reason why these puts are going up so much in price is because everyone and their mother realizes there's a ton of volatility in this. I can't honestly tell you to buy the puts. I really couldn't. Christian brought the puts. I honestly can't tell you to buy the puts. Only reason I won't tell you to buy the puts is there's a lot of volatility, high price in those puts. That means you need a substantial move to see this thing get back where you make the money. So again, if you got a $16 premium on the puts, you need the stock, or excuse me, a $90 premium, $100 premium. You need the stock to drop basically 100 points just to get into the money. The puts aren't cheap. You might find the AMC options a little cheaper. All right, so I believe, and I see this. I believe that the SEC will within relatively a near term will come in and close that loophole, that gap that's happening right now with Reddit. Let me explain what I mean by that. If you're providing stock advice to someone, one is you have to be a broker, you have to be registered, and two, the way the market's set up is that they want you to give them the advice and then you take your position afterwards. In other words, they don't want you to take a position in the stock and then run around telling everybody how wonderful it is and drive up the price of the stock. That's why brokerage firms cannot, when they put a new buy recommendation on the stock, they cannot be buying the stock for themselves. They have to wait until after the buy recommendation. So Reddit's a different story. Reddit on their platform is putting out there in a chat room, people are putting out there what they like and what they want to buy. They're going to figure out some way to shut this down. Again, GameStop at best, is a $20 stock, at best. So you're seeing the power now of what happens when you get a group behind something, pushing and buying and pushing it up. That's what's going on with GameStop. Now understand this, and some of you are new investors, there's nothing fundamentally justifying the stock being at $345 or $330 in the aftermarket. All right, in fact, let me go see what's going on. But there's nothing to justify that stock price fundamentally, other than the fact that it was pushed all the way up here. So for those of you who are long the stock, be nimble, be quick. For those of you that put money in your pocket, God bless you. I would, if I could, try and figure out a way to get short the stock. My two brokerage accounts that I use have basically shut me down, so I cannot, not shut me down, but shut down both stocks in terms of trading. Now, for those of you who weren't around, during the dot-com bubble, we went through the exact same thing. I'm going to get to AMC. During the dot-com bubble, we went through the exact same thing. And what happened was the brokerage firms were so afraid. You had stocks that were running up 50, 60, 70, 100% in a day. And the SEC got so nervous about that, worried about that what they did was they would not allow you to buy dot-com stocks on margin anymore. You got to understand, if you bought this stock on margin and it falls down in price, if it drops 50%, it's going to mean for you have 100% loss. So the thing I guess I'm saying to you guys is understand the downside risk to what you're looking at. So when the dot-com bubble came about and it finally did burst, the people that got hurt the most were the ones that were left holding the bag. We're looking at the same thing. Like I said, the brokerage firms took away margin, which means you had to pay 100% cash for these trades. That's what's going on with TD Ameritrade, Charles Schwab. Now, Robinhood's letting it go. Robinhood's a different beast. But I think the SEC is going to come in and have some conversation with Robinhood and Reddit in terms of what's going on and the people that are involved in this. As one person said, they could be breaking the law. Again, if I'm going to tout a stock and take a position in it before I start touting it and tell everybody how wonderful it is, and I have enough people behind me and push the stock, that is stock manipulation. Now, one of the things was, I said I was going to tell you some stories, so I'm going to give you a couple of quick stories. One is, when I worked at Shearson Lehman Brothers, I had an office partner. He and three other people at other different firms were in stock manipulation. They took a low price stock and they ran it, and they kept moving it around. And one would buy the stock all day from another one. Then a week later, that one that brought the stock would flip it to another one of the guys in the group, and he would buy it up a little bit. Then the next a week later, They would all sell their stock to another guy in the group, but they would raise the bid. Each time they did it, they raised the price. So they were artificially manufacturing the stock, making money. The deal is that the FBI came in and cuffed them up and took them to jail. So it's not as hard as you think to find stock manipulation. It really is not. And the reason being is you have time and sales. And one of the things I did when I looked at this, I went and looked at time and sales. Now, the reason why I look at time and sales is that this. You can see the size of the position that is being taken. And when I look at time and sales, in fact, I'm pulling up time and sales right now. Hold on a second. Where's my time and sales? I'm not going to pull up. I don't have time to look for it right now. It's on my other service. When I looked at time and sales on this, spit it out, Mike, on GameStop. What's going on over here? All right, let me reload this. When I look at time and sales on GameStop, the one thing I noticed was there were a number of, I'm sorry for leaning like that. When I looked at time and sales on GameStop, the bulk of a lot of the trades were 1 and 2 shares. What that tells me is, one, is that you weren't looking at heavy institutional trading on this. You were looking at more of mom and pop. So when Reddit talked about their platform and they had 180 million followers that were actually trading this stock, you knew it was time to worry. I heard on the Financial Channel that one guy was basically saying that his grandmother was telling them that she heard there was some exciting things going on in GameStop and that they should buy the stock. So I guess the thing I'm telling you is that once you have grandma out there telling you what's going on with the stock and how it is, it's time to get out. When I first became a broker in 1987, just before the big crash of October 87, Black Monday, it was broker heaven. And what I mean by that is I had clients, people calling me up, wanting to open accounts and buy stock. And they would buy it at the market open at 9:30 and by market close be up 25, 30% and they'd sell it. All right. It was broker Disneyland as far as we were concerned. That's how much money we were making. That's how things were rolling. And in October 87, that month, the market crashed. Those people that thought it was so easy to make money in the market lost all the money they made. And the comment from all of them was, the market's rigged and I'll never get involved in it again. All right. So you're looking at the same thing. Although in this case, the market's not rigged, but it is kind of being rigged. Seen it before, seen it a number of times. Now, the other thing too is I'm going to look at AMC real quick. So let me put up, oh, by the way, before I forget, see, I've been chatting up so much. Bear with me a second. Come on, where you at? Well, come on. Where you at? There you go. So what I pulled up right now is a 1 hour chart of GameStop. And the reason why I put it, and again, this is on, you can see this. I wanted to talk about this real briefly, only because you can see back here when the stock spiked up through the 100 price, that was the earlier move. Then it backed and filled, and then it spiked again. Look at how the volume decreases. All right. One of the things that you look for is when something's running out of steam, running out of gas, you look at the volume. And you can see that even though the stock has traded higher, and by the way, this is an hourly chart, so you can see what's going on. You can see that the volume has started to dry up in certain places, at certain prices, at certain times. When you see light volume, most likely you can expect a pullback. In other words, a stock that runs off a light volume is a stock that you probably don't want to buy. Now, bear with me 1 second. Yeah, and I'm looking at a daily chart, and the volume today was about half of what the volume's been for the last 3 days. So volume's starting to dry up on this. And now here's the other one, hourly chart, and this is AMC. So you're looking at somewhat the same thing. And I'm pulling up the other chart. So AMC, a couple things. Let me take this off too. If you weren't sure if AMC was in a bubble, here's a quick way to look at it. The company was talking about declaring bankruptcy. I'm not sure if they went into bankruptcy, but they're talking about declaring bankruptcy. We also know that the AMC theaters have been closed for 9 months now, 10 months, because of the pandemic. that talked about how much money they're losing, how much they're hemorrhaging. How can this stock, based upon that, even if the pandemic is actually over, even if the pandemic is gone, do you think that AMC is going to get right back to that revenue stream in the next 60, 90 days? The stock is way ahead of itself. Now, I have not crunched any fundamental numbers to see what I think the stock is worth. But again, the one thing I can tell you, I'm going to pull it up. And by the way, before I forget, because I'm pulling it up now, earnings for GameStop. Make sure you understand this. Earnings for GameStop this past year, 2020, excuse me. Earnings for GameStop for 2020, they earned 22 cents. All right, that's the annual earnings. So a $340 stock earned 22 cents for the year. They're forecasted for 2021 to lose $2.10. That's the stock that I'm afraid to trade. AMC. Let's see, AMC for 2020. Whoa. AMC's projected for 2020 to lose $38.35 for 2020 annual. For 2021, they're projected to lose $6.25. And you're telling me that you're loading up on this stock for what reason? Because you saw somebody on Reddit say this is pretty exciting. We're going to break the hedge funds and we're going to run this thing. Understand this again. If you're the last one holding the bag, you're the one that's going to get run. Again, if you can find stock to short, when this thing does start to break down, maybe get short. But again, it's going to move so fast, you probably won't have time. And the challenge you have now is if you get short now, one, can you find stock? Will your brokerage firm find stock to allow you to borrow the stock too short? Two, once you do get short, if they run the stock before it breaks, you're going to lose some money. You know, I got all these stories. The dot-com bubble. I'm not going to say too many names, but during the dot-com bubble, I happen to, I'll check with that in a second overnight on AMC. There was a guy I knew, acquaintance, didn't know him well. We used to chat it up. He was a portfolio manager. And this portfolio manager used to work for George Soros. So those of you know George Soros, hedge fund manager, equity trader. He used to work for Soros. When he left Soros, he started a hedge fund. He put in, I believe he raised $5 or $10 million, and George Soros put in another, whatever he raised, George Soros matches. I believe he had a $20 million fund. It's either $10 million or $20 million fund. Now we're going back to 2000, 2001, around there, dot-com bubble. So we're going back. And we're in the middle of the dot-com bubble. And again, like we are right now with the bubble in GameStop. And he said, I'm going to short these tech stocks. So he took his portfolio, margined it up, and got short all these tech stocks during the dot-com bubble, or dot-com stocks. Well, the dot-com stocks continued to run, continued to go higher. As they went higher, he got a margin call. And at that point, his account, if it was 20 million, Lilly had dropped down to something like $10 million. So after he closed out his short position in all those stocks, he hit the brighter day. You know what? I was short. Evidently, this thing's going to continue to run. So instead of me being short, I'm going to take all the money and I'm going to go long. So literally, he took all the money he had left, $10 million, and went long. Needless to say, the dot-com bubble burst and he lost all the money. So again, he lost $20 million in less than 6 months. That's the power of when these bubbles burst. You cannot know when it's going to actually stop rising, but when it finally does, it is going to burst. Again, I'm telling you these stories because, as I said in my post, I've seen this before. I've seen it before. I've been around it. It's entertaining, But unless you're sitting in front of your monitor and you actually have a good idea what's going on and what to expect, it's not the kind of market you want to trade. It's not the kind of stock you want to trade. And by the way, speaking of the market looks terrible right now. So we've, I think we were down as much as 500. I'm not sure where we closed, we were down, but the market does not look good at all. Now, I did have a question concerning, so let me go see what the aftermarket trading looks like in both these stocks now that the market's closed. Now, I'm going to do something. Let me just check this real quick because I also want to do something for you. Let's see. AMC we were going to do, right? Not GameStop. AMC, aftermarket. Come on. Come on, system. You can do it. It's moving slow. I guess a lot of people are on there trying to see the same thing I'm trying to see. So I'm waiting on it. All right. While I'm waiting on that, well, let me try it again. Come on, come on. All right, let me stop. Let me start it again. It had a problem loading. Okay. So aftermarket trading, AMC is down down to $16.50. All right, so no surprise there. Let's see what's going on with GM. GameStop. Aftermarket trading, GameStop is down at, like I said earlier, $330. Now I just popped at $335. All right, let me explain something to you guys. Make sure you understand this. Aftermarket trading is not like trading during the day. Aftermarket trading works differently. So I'm going to use GameStop right now. I'm looking on my screen. GameStop, the last trade was at $331.49. Let's say I want to buy some GameStop. All right. If I want to buy some GameStop, I cannot go out there and just hit a bid in the aftermarket. What I have to do is I have to put a bid out there. So if I want to buy GameStop again just traded at $329. Let's say I want to buy GameStop. I have to actually go out there and put a bid out there on GameStop, let's say at $332, a little bit higher than where it is. I have to put that bid out there and then let somebody come and take it. All right? So let me say it again. If you want to buy GameStop in the aftermarket, this isn't not GameStop, but any stock. You cannot just say, what's the offer price, buy the offer price. What you have to do is you have to actually offer the stock out there and let somebody come and take it. If you want to sell your stock, you got to put out there, put an offer out there where you want to sell it at, and then let the market come and take it from you. So if I wanted to sell my stock in GameStop, I can't hit a bid. I have to put a bid out there and let somebody else come and take it. All right, is that making sense? I hope that's making sense to you guys. Aftermarket trading is not like during market hours. So what do I say that? In other words, what I'm saying to you is that it's funny, but aftermarket trading can be manipulated. Let me explain. Let's say I want to drive up the price of GameStop. I can literally, again, please, I'm not going to do this because what I'm about to tell you guys is a gray area. I'm being kind. What I'm about to tell you guys is illegal. But we could do this. I could go out there right now and offer stock at GameStop at $330. Then contact somebody in my trading group and say, look, take that offer. And then when they take the offer at $330, I say, all right, now re-offer your stock out at $332. Then I'll take that stock at $332 and I'll re-offer my stock out at $335. Then I'll have somebody else in my group say, all right, you come take the stock at $335. Now, as I keep doing this, at some point, follow what I'm doing, at some point, other people are going to watch and say, whoa, we got some activity going on here in GameStop and the stock's going higher. You know, and they'll follow behind me. I'm creating the enthusiasm in here. I'm creating the activity. And then they'll come and literally take, and when they come and they start saying, wow, this thing's going up, and they start taking over and they start bidding it up and moving it up, I'll flip my stock right out to them. That's how the game is played, guys. That's how you can manipulate it. I have seen, and I know hopefully I'm not redundant, but I've sat in offices and saw people manipulate, move markets to exercise their stock options. I've seen them move stocks. I've seen them front run blocks. I've seen this before. And I'm here to tell you that unless you're on the inside, you do not want to play with these folks. If you make money in these, thank as I always say, thank the trading gods, put the profit in your pocket and move on. This is not the kind of game you want to play sitting on the outside. And trust me, guys, we're all on the outside. All right. We don't have a level 2, or you're not trading on level 2 or level 3 if it's NASDAQ stock. You're getting your news late, the quotes are coming in late, then you're trying to buy. This is not the kind of game that you want to play, especially if you're an amateur. Now, I'm not wishing bad on anybody, but when this bubble does burst, you're going to hear the stories. You're going to hear the people that have come out and say, I lost, how much money I lost. Because right now you're hearing the stories about how much money somebody made in the stock because it's higher. All right, you're going to start hearing stories about how much money they're losing if the stock goes lower. I've had a couple of questions on AMC, so I'm going to try my best to answer it this way. One, I wouldn't touch AMC. Before all this happened, you couldn't pay me to trade AMC stock. Like I said, the company's in problems. I don't see any growth potential in there. I don't think it's undervalued. I don't think it's a value play because the business, the revenue and everything has dropped. So it's not a value play. It's not a growth play. It's really a special situation. And the Reddit crew through Robinhood have turned this into what we call a special situation. That is by trying to make money, basically by, I hate to say it, front running their own orders or front running their own recommendations. So I would not play it. And then again, based upon what's happening with the stock manipulation, I definitely would not play it. Do I think IDEX continues to rise? I have not followed the stock, so I can take a quick look at it, and I will take a quick look at it. IDEX. All right. The reason why I'm laughing. What's going on? What's going on with this? I don't want to do that. Oh, I'm having technical support problems. Sorry, I'll get to it. I just don't want to get to it now. So, IDEX. All right, let me shrink this down a little bit to a weekly chart. Take a look. Monthly chart. All right. Again, I am, please don't take this the wrong way. I don't trade $4 stocks. No interest. A $4 stock to me is an option. That's the first thing. The second thing is, I don't know what they do, but again, you can see the manipulation in this. You can see the volatility in this. Again, I guess, let me phrase it this way. I've seen ExxonMobil manipulated to drive up the stock price to exercise some options. Seen it firsthand. So when I see things like that, when you show me a $4 stock, I have to say it, you and I could manipulate this stock. You and I could drive this stock up. Just an example I gave. So I'm not a big fan of $4 stocks. I'm just not a big fan of it. Yeah, DoorDash, I believe it was DoorDash. DoorDash is trading well. I think it was Airbnb set a new high today during all this. I'm not sure if they held it. I'll take a look now. So the IPO, so just so you guys know, a couple of things. Well, let me say this. One is, I trade the IPOs. So you had a couple of them. Airbnb set a new high today, I believe it was. Today hit 216, closed at 200. So it hit a new high. Who else? DoorDash actually, I believe DoorDash today set a new high, 256, and ended up closing at 196. So volatility is here, guys. And the reason why you have volatility is because, again, I'm not picking on my Reddit people. I'm not. When I was first starting out, I did the same thing. So but they are having an influence on these stocks because you're seeing some volatility in there. A lot of stocks did not hold the gains. Who else? Palantir, PLTR set a new high today. Stock hit 45 today, so it did set a new high. It closed up $2, $2 and change, but it set a new high at 45, so it ran. Now the other thing is, and SEER, I think I mentioned it last call. I think I did, but the deal is this: is SEER announced a secondary. The stock was trading in the 80, 83. They announced a secondary 3 days ago. They're raising capital, and the stock has been down. I tried to short the stock. I couldn't find stock to borrow to short. The stock hit a low today. Right now it closed at $68. So the stock is down. They were supposed to be pricing that secondary tonight for tomorrow trading, but it looks like they're not going to price it tonight. That's the reason why you're seeing so much pressure. Who else? So you got a number of the IPO stocks that are trading really well. Was it Wish? Content Logic. Again, it didn't set a new high today. Oh, no, it did. I take that back. Set a new high today, $31.48. This is the stock when it broke 24 in the IPO. I told you to short. It went down to, I believe the number was $17 or $16. And now it's rallied back. And when it went through that 24 number on the upside, I did not put a buy recommendation out there only because I'm not crazy about it, but I thought it was a buy. And the deal is it's being pushed also. Posh also helped push it. Now, Posh has not rebounded back from its first day, but that's what's going on. The only marijuana stock that I really looked at was that, and I'm going to it now, was the HYFM. Hydro Farm Holding out of Canada, marijuana company. I looked to trade that. The 52-week high is 85. It's IPO a couple of weeks ago. Right now it's trading at 33. The stock has actually been trading really well. I can't honestly tell you why. I have not purchased it. I'm looking at the chart now. The stock is trading relatively well. I've got no problem. The breakout from 77 to the 86 was a nice little breakout. It did back and fill a little bit, but it's still in that same trading range. It's upward trend. So that's the one I do like. HYFM. Here, let me type it up for you. Symbol is HYFM. There you go. So that's one. And I would say to you that it's up in Canada. I think I would say to you right now is I personally would wait till it breaks through that 86 number, that old high, which is around 85 and change. If you can't wait, you decide to buy it now. I put a stop loss on it. It looks like the bottom of this trading range is almost, where is it at now? If you brought it now, 10% below this would take you down to the low 70s. Yeah, you're still in the narrow trading range. If I brought it now, I wouldn't buy it now. I'd wait for some backing and filling a little bit, which it did. It had a little spike today, but ended up closing flat. So I'd wait for some backing and filling. And then if the stock broke through that, started to run and broke through 86, I'd jump on it. Yeah, I'd wait for the run. Because the reason being, it could back and fill. It looks like it's trying to do it now. Volume's kind of dried up a little bit as it's backing and filling. And earnings are due out in March 4th. Now, the other thing I want to check is, believe it or not, bear with me a second. All right, let's see. All right, so I'm not sure where it's going to go from here. Last quarter, ahead of earnings, I purchased the stock ServiceNow. Recommended ServiceNow. Symbol is NOW. So I purchased that stock ahead of last quarter's earnings, and the stock's done nothing but made me happy. It's a long-term hold. What I'm bringing up now is they beat the number today. The stock was beat the earnings. They reported earnings today. They beat the number. I haven't looked at revenue. At the market trading, the stock is up 22 bucks. It has not taken out the all-time high. The thing I guess I want to see is it'd be interesting to see what happens with the follow-through tomorrow. So if there's any follow-through, like I said, the stock opened up 20. It's up 22 bucks right now at the market trading. Let's see if there's any follow-through tomorrow. The old high, I believe, was 569 bucks, I think it was. The old high is what, 566. So let's see if we can attack that based on these numbers. I mean, they beat the number pretty soundly. All right, let me see. Any other questions? So somebody wrote they're trying to take over the industry. I think that was about. I'm not sure what stock that was about. Oh, somebody said they brought Sear at under $61 a share. All right, so here's the deal with Sear. Sear is doing a secondary unless it's canceled, postponed. When that secondary comes, they're going to drop. I don't remember the actual number. They're going to drop some stock on the market, though. They're going to drop it down. And they priced it. It's probably going to be priced low. Like I said, the stock was up at 83, as you saw, $80. It's down right now. Again, so hold on a second. I'm just pulling up a chart so I can give you my visual opinion. So I'm looking at the stock right now, Sear, S-E-E-R. When they announced it, volume's light. I expected the stock to be priced around $70 a share, so now it's 60. Looks like today it closed at 68. So I would not be surprised when they do prices to see them prices somewhere around 68, 65, somewhere it is right now because of where they brought it in. I don't have an answer for you. I'm looking at this chart and I'm going, I'm not sure. If this thing doesn't hold this 60 level, geez, where's the next support? If this thing doesn't hold the 60 level, next support resistance is about 63. Yeah. 63, 62. So if it doesn't, so let me go back in again. When they price this thing, if it does not hold, again, if it does not hold the 63, I'd get out. The other side is that based upon this and what they did, you should see it bounce off. Once the secondary is digested, you should see it bounce and run back up a little bit if everything holds up. Now understand, this is a biotech. They have no revenue. They have no earnings. It's all about the drugs that they're looking at and what they're doing. I'm sorry, you guys are ahead of me. Let's see. I'm looking at my time. I got 10 minutes, so let me just do I'm gonna do a quick look at some of this stuff. So somebody just put Clover Health. Again, let me go back to I just need to see a monthly chart real quick. Weekly chart. Ooh. Wow. All right. Stock scares me. Clover Health scares me. The reason why it scares me is it made that push to an all-time high at 17 and change off a $13 stock. And then it basically gave it all back. It tried to make that run again today. It looks like from 13.5 to 17, but it failed. I'm not crazy about it. I don't have an answer for you. I guess the best thing I would say is that I would not be interested in buying it. I don't know if I'd buy ServiceNow right now. I'd wait till tomorrow to see what it looks like on the opening. The reason being is, again, I don't I got to see if there's going to be any follow through. Affirm. Affirm has not followed through yet. I'm still watching it. It's one of the stocks I watch. You know, the stock formed a symmetric triangle. I'm looking at it now, and it broke down. It broke down to the downside, which is actually a bearish sign. Boom, 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 boom. A lot of work in here. So again, I would not touch this stock. It's got to work its way through all this stock in between 106 and 125, 120. There's a whole bunch of stock in there that's got to work its way through. Before I'd even consider it. So again, I'll just keep it on my watch, but that's what's going on. Anything else you guys ask me about? Yeah, what a day, what a day, what a day, what a day. Am I still frozen? Somebody said I was frozen. Am I still frozen? All right, let's see. Yeah, now is up. Lemonade. Man, I think the Reddit guys have gotten a hold of Lemonade. What do I mean by that? Lemonade has actually penetrated the 165 level where it was priced, ran to 177, and then backed off and didn't hold it. The stock has not been able to hold. And again, you see it like today. The stock today was up as high as today. Stock was up at 182, and then it closed up $2 today to close at 155.99. A lot of volatility, stocks moving. Again, for me, now the fact it penetrated to 165, but it's not holding, I would definitely wait for the stock to go through the 188 number. Now, the other thing about Lemonade too is that the shorts also have we talked about this earlier, Citron Research. Citron Research has a short report out there on Lemonade. All right, they've been shorting it. They basically said that they think that Lemonade is a $100 stock. I'm not going to go into too much detail on it, but they said that it's basically a $100 stock at best, and that they thought the stock would pull back to the $100 range. They actually made that announcement when they were doing the secondary. So it was a chance for them during that time to increase their short position because of the trading and the volume and the action in the secondary. Is probably when they used that chance to get short the stock. So, so the bottom line is, because the stock cannot hold when it actually penetrates and makes those, when it starts trading through that 165, the fact that it can't hold that means I'm going to sit on the sidelines and wait. My number again now in Lemonade's 188. And then at that point, the way the stock's been trading, I'd be really cautious. All right. I don't see, somebody asked me about, let me do this again. Bear with me, I'm in my chart service. I'm looking for, hold on a second, I'm looking at NIO. You guys know NIO Inc., electronic car company, so forth, so on. I'm looking at the chart, bear with me. Yeah, that's what I thought. All right. So here's the deal. Stocks in the trading range right now between basically $56 and $65 in that trading range. So right now at the bottom of that trading range, if it does not hold this 56 number, you could expect the stock probably to pull back to 50. I'm looking at my time. Let me say a couple things. If you're the person that just wants to trade every day, if you like to trade, great, you brought it when it brought it now, cool. Good, by the way, good trade, nice buy. If you're the person that likes to trade, you could buy the stock down here at 56, put a stop loss in probably around, no more than 10% below what you paid for it. And then when the stock hits 65 in that range, take your profit and lock it in. It's in a trading range. When it finally does break out its trading range, the breakout would be a move above 67.50. So, but right now you can see it's in a trading range between 56 and 65. So down here you buy it, put a stop loss on it a couple of points below, no more than 10%. to protect you to the downside. Based on what I'm seeing in the volume to the downside today, it should bounce off this. All the volume over the last 2 weeks, all the volume basically has been light to the downside. So, yeah, so that's what it's been. So I would look down here and say probably a good place to actually trade the stock, to buy it here at the 56 level, sell it when it hits 56, trade it that way. All right, I was about to leave, but Richard, for you, Richard, you know I'll do anything for you, Richard. Let's see, my thoughts on this. Grow Generation. This is a marijuana stock that you got me looking at, Richard? Sounds like a marijuana stock, Grow Generations. And again, just going on a technical, from a technical standpoint, just based on technical analysis. Same story as NIO. This one, though, it was in a trading range between 47, 46, 47, and 54, and it broke that today. It broke that, and I would expect it to test that new, that old trading range at the 43 level. So I would expect this thing, and it actually got down pretty close. I'd expect it to trade down to the 42, 43 level. Is an old trading range. We definitely broke out of that trading range that was there between 48 and 54. So I'm not sure if I'd be a buy. If you're long here and you got some nice profits, you might want to take it. But that's what's going on there. All right. I got to go, because if I don't go now, I won't be able to actually save this recording. So you got my opinion on GameStop. You got my opinion on AMC. Oh, you're welcome, Richard. And again, I hate to say it this way. If you're making money in GameStop, keep doing what you're doing. If you were thinking about trading GameStop because you thought there was opportunity to trade it, my comment to you is I'd stay away, become a spectator. But you can learn from this. So watch it. Watch how it trades. Watch what happens. And when this thing starts to crack, it will crack, and it'll crack hard. I would say get short, but the problem you're going to have is it's hard to get short. Paul, hopefully, I did not get your email, so I'll check my email now. I looked earlier today. I had not gotten the email, so I'll check. All right, guys, I got to go. It's been a pleasure, as always. I know we didn't get a lot to talk about some other things, but the IPO calendar is heating up. The only question we have now is, will the market stay up and give us a chance to actually trade those stocks? All right. Appreciate you guys, and I'll see you next Wednesday.